Hello investors. So welcome to this new video. And one question which I am often asked is whenever I do some quick analysis on a stock, I'm asked that how did I do this analysis in such a quick time. Also, you would have seen while tracking me on Twitter, we released something called Insight Express, where we put a quick analysis on any particular stock. So we use a lot of tools at Scientific Investing, right from stock ideation for stage to analysis stage to selling stage. So today I will talk about one such Excel tool which I use it for the quick stock analysis, which I call my stage one analysis. So whenever a stock comes on my radar, I pass this stock through my stage one analysis tool, and let us go through it. So you can see this is the Excel tool, and actually this tool has multiple sheets. So these are the various analysis sheets this tool has. We have a summary sheet tool, then we have a margin analysis tool, then we have a operations analysis tool, then we have sheet for cash flow analysis. So we have sheets for various analysis. In this video, it would be difficult to cover everything, but I will quickly share this analysis summary sheet, how I use this sheet and how I generate the insights. And the outcome of this insight is this is the kind of one pager insight we generate once we pass any company through this tool on various aspects, including how the company has performed, what we like about the company, what we don't like about the company, what are the key questions we should address when we analyze this company in detail. So let us go through it. So in this video, I'll focus only on the summary sheet insights. So if you see what we have captured here is 8-year, 5-year, 3-year, 1-year performance and trailing 12-month performance of this company. And for this case study, we have used a company, LT Foods, which is in FMCG sector. It's a rice company. Many of you might be using Dawat rice brand that comes from LT Food. And what we can analyze here is how the company has done on 8-year, 5-year, 3-year, 1-year TTM basis in terms of sales growth CAGR, EBITDA growth CAGR, EBIT growth CAGR, PBT growth CAGR, PAT growth CAGR, EPS growth CAGR, in terms of dividend growth, in terms of cash flow growth, how much assets they have added in terms of CAGR, how much debt they have added, working capital, how the market cap has grown, and all of this. So this is the growth summary view. And you can see this company has done pretty well. This company has grown between 12 to 28%. 1 year is a too less time, but if you see from 3 to 8-year perspective, the company has grown somewhere between 12 to 19%. In fact, the recent performance has been much better. You can see this has been improving 12, 14, 19, 28. Now, this is how you generate insights out of it. The question is, sales has grown, but profit growth hua hai. And if we see against 12% sales growth rate, 24% PAT growth rate, against 14, 24, against 19, 30. So the company has been able to generate more profit growth rate compared to the sales growth rate. Now, PAT growth rate is okay, but is the company doing EPS growth rate? And why I am talking about EPS growth rate separately from PAT growth rate is because the company might do equity dilution. So there has been maybe little bit of equity dilution. That is why your EPS growth rate is a little lower than your PAT growth rate whenever you see. So this is how you are able to quickly get insight in terms of how the company has done good on terms of sales, PAT, EPS, dilution, whether the PAT growth rate, which is accounting growth rate, has been converted into cash flow. Yes, it has been converted, not exactly as it is, but still decent. And all of this has been done despite of reduction in debt and despite of no significant increase in working capital. So you are increasing your sales in double digit by increasing your working capital debt only in single digit. And all of this looks very, very healthy. So this is how you look at a growth sheet. In growth sheet, we only look at the CAGR growth rate, but what if we have in terms of size, how the company has done in terms of size, how the company has done in terms of converting the accounting profit into cash flows. So let us look at it. When we look at these consolidated numbers, this is the total sales company has done in 8-year, 5-year, 7-year. This is the total EBITDA number, PAT number, cash flow. So these are absolute numbers. What is most important in this consolidated summary is these right side percentage numbers. So how much of EBITDA the company is able to convert into cash flow? And those of you who watch my videos regularly, uh, I can remind you of some videos where I spoke about my quality investing framework, and cash flow generation is an important part of it. And I look for companies which are able to convert 70% of EBITDA into cash flow from operation, at least 60%. If we look at this company has been able to generate more than 60%. It's not great, but it's not bad. It's decent. We can't again go on a 1 year data because these things on a 1 year, the fluctuations could be higher. I would suggest to look at 3 year data. It has been consistently around 63 to 66%. Not only that, after all the capex which the company incurs, it generates free cash flow also. And slowly the free cash flow generation has increased. The company is generating almost 40% of cash flows into free cash flow. And where the company is using the cash flows, almost 50% of the money is used in capex, which is driving this growth, and some dividend, 8 to 10% dividend. Is the business very working capital heavy? Receivables wise, no. Very good 10% receivable to sales, but it is super working capital heavy when it comes to inventory management. Almost 45% of sales is in inventory. Now, this is how you start generating insight. Let's say I have never seen this company in my life. I have never seen this sector in my life. The major insight I'm getting, this business is very, very inventory heavy, very working capital heavy. It tells me something about the business model. Now I need to go and research why this company is so working capital heavy. And that is where if you'll study about the rice sector, you will understand the concept of aging of rice, where you need to age the rice long enough to bring quality. And that is why, the raw material needs to be in the inventory stage for long. Now, if we look at the third sheet, which is the KPI summary sheet, how the company has done on various KPIs. And this is where we get a sense of volatility of business. We get some sense of cyclicity of the business. We get some sense of reversion to mean. If we look at the gross margin, the company has done the maximum gross margin of 38%, minimum 15%. Average gross margin is 25.5%, and currently the gross margin is 28%. So by knowing these numbers, we know where the company is in terms of cycle, in terms of reversion to mean. Same with the EBITDA margin. The company's average EBITDA margin is around 11%. Currently, the company is doing around 12%. PAT margin, it also says we need to research why the company had this minimum number, which year this company had this minimum number, what led to this minimum number, what led to this maximum number. It gives all these insights we can go and research. Then interest coverage ratio, is the company in comfortable debt servicing position? 8, very decent number. Current ratio 3, very decent number. You can see working capital heavy business. Why? Because there is a very high inventory and very high inventory days. It says something about the business model, and we need to go and research. How is the company in terms of churning its assets? Very good, 7 times net fixed asset turns, which is very, very healthy. Almost 8% ROE. The average ROE is also 5%. The average ROE is 14%, ROCE is 14%. Not bad, decent, and the current numbers are better. Now, looking at valuation, valuation is very important. And in this one summary sheet, we are getting all this idea. If we look at valuation, I have used few metric P, PB, EV, EBITDA, market cap to sales, and EV to sales. And again, we get a range of minimum valuation, maximum valuation. What has been the average valuation? What has been the median valuation? What is the current valuation? Is there a discount to mean and median, or it is higher than the mean value? And we get all these numbers. Now, the second last one is quarterly summary, because how the business is shaping up in last few quarters is very, very important. And what we have is how the trailing 12 months sales is growing. So we can see the company is growing its sales every quarter. You can see there is a continuous growth rate. If you see the PBT numbers are also growing. If you see the PBT margin, the PBT margin from 7.6% to 8.1% to 8.7%, to there is continuous improvement which is happening in PBT. And these things are important because when you will analyze cyclic companies, you will see these margins will be fluctuating. When you will see a company's margin topping out, this number will start decreasing. If after multiple quarters, if the margin is bottoming out and changing, you will see this margin improving. So you can get a sense of when the cycle is changing. And if you blend technical analysis with these kind of fundamental analysis, It'll be very, very interesting. How the sales has been growing year over year for each of the last 4 quarter, PBT, operating profit growth rate. So you get all this idea in one single sheet. And let me tell you, this is just one sheet. We have 12, 13 such sheets which provide a lot of insights in detail. And finally, this is the business summary. What is the gross margin company operates, PAT margin, what is the tax they pay, receivables, working capital, interest coverage, what is the cash flow to EBITDA. So all the key numbers you get in this single sheet. Now the question is how we use this sheet. So we have built this Excel template, and this Excel template sits out of Screener. And if you put this Excel template on screener.in, which all of us use, we will be able to generate all these insights. And I have spoken about only one sheet. I will talk about more sheets in further videos. But if you want to do this kind of analysis in quick time, and after experience working on multiple companies on these kind of sheets, it takes me 1 hour to go through it and then build my notes. So if you want it, there are two ways to get it. One, join our practitioner community, where not only this Excel sheet, but many more such tools, productivity tools are available to us in terms of trading view tools, scanners, Simba, these Excel tool. We have another tool for competitive analysis. I will talk about it some other time. So our practitioner offers all of this, and currently we are going into a new financial year. So we have a new financial year discount coming. All you need to do is go to our website, learn.scientificinvesting.in. If you want practitioner subscription, go to the practitioner bundle page. While paying, use this code HAPPYFY25 and you'll get 10% discount. Whether you want a practitioner subscription or learner plus practitioner, which is FunTech plus practitioner, or you simply want to go for a learner package like FunTech, just go and put this voucher code HAPPYFY25 and you will get a 25% discount. Also, what we do is, in order to provide the best users of this tool, we have done some super sessions. We already did a session 1.5 years back. Last month also we did one session. These super sessions are part of practitioner offering, and we have done last super session, which was a 4-hour session where we covered 1-2 good companies using this tool. And we plan 2 more super sessions where we will cover again few more companies, and we will do a competitive analysis tool super session. So I'll introduce competitive analysis tool on YouTube sometime in future. But this is what we do as a part of practitioner. So join the practitioner program with financial year discount if you're interested. And do track me on Twitter, because all these resources like Insight Express and all what we spoke about, where we did this whole detailed analysis of LT Food, we keep publishing on Twitter. So we have more companies, Insight Express coming in coming weeks. So we will be putting on Twitter. But if you want us to analyze any specific company using our proprietary stock analysis tool, you let us know name of the company in the comment section, and we will publish an Insight Express on this company using our tool.